Thank you for your patience, everyone. Okay, so we're about to start again with our new webinar. For this time, it's going to be in regards to cannabis financing. We're going to talk about everything you want to know and everything that you need to know about this new trend. Okay, we have, I think, enough to start. And just so to let you know, we can have all your questions answered at the end of this webinar. We're going to try to make it a little bit different this time. Eric and I are going to discuss more about this new program. Okay. Eric, you want to say something?
Hello, everyone. Yeah, this is Eric. So, cannabis is something very new in the real estate and lending industry. There is no historical data about it. So it's kind of hard for us lender to underwrite the loan. For real estate agent to put a value on any cannabis related property. But so let's start with this.
Okay. We're going to start with I think the basics, what everyone wants to know in regards to cannabis financing. And I think the basic is about how did it become legal? Since it's been legal, what is it that we need to know specifically?
Okay. Up to now, there are 11 states that legalize cannabis. The two newest one is Illinois and DC, which the legalization came into effect on the 1st of January. However, cannabis still illegal on the federal level, no matter what the state decides. So that is a thing that we should pay attention to. Why I say we should pay attention to, because almost all the bank in the U.S. it is federal charter. So all those banks are prohibited from accepting deposit from these cannabis related business. So more or less it's a cash based business. And if it's a cash based business, it's very hard for us as a lender to gauge the financial strength of the business, of the property.
Okay. Now, there's a very important thing that you mentioned in regards to legal. Now, you said it's legal right now in the state of California, right?
Right.
And what other states would you say it's?
If I remember correctly, Oregon, Illinois, Colorado, DC, Utah, and about 4 or 5 more. I don't remember.
Okay. Okay. Now, one thing to be very concerned about when it comes to cannabis financing, we need to know the difference between the two of the following: cultivation and dispensary. Can you give us more thought about that?
Okay. Cannabis or not, it's still a real estate based loan. So in a sense, there are two types of collateral we are looking at in here. In cannabis, first, there is a dispensary. What is dispensary? Dispensary is a retail store selling cannabis related products. So normally it's in a building. So it's real estate. Can be a single building, can be in a shopping center, can be in an office building. Another type is cultivation, growing cannabis, and it's normally more like farmland, and the real estate collateral is land. So we don't get into like cultivation because we don't loan on land. Reason, because if we had to take the land back, we don't know how to grow cannabis. We had to do something else like grow cabbage, carrots, whatsoever. For the dispensary, it's a building. So if we had to take it back, we can always rent it to a non-cannabis business. Yeah, so that is a difference. Cultivation, likely no private lander would touch. People in that space, they have to raise capital from like a fund, an equity fund. They have to bring in an equity partner. It's too early, for like lander to get into like cultivation.
Okay. So dispensary is a lot easier to underwrite as well, right? When
Right,
there's a
because
loan
it's
request.
a real estate, a building.
Mhm.
You can see, feel, touch, and like I say, if lender has to take the building back, they can use it. They
Something
can
else.
for non-cannabis purpose.
Mhm.
For like cultivation, what else can you do? Growing carrot, growing cabbage. Yeah.
Yeah, it's a lot more complicated.
Mhm.
Okay. So what do you think lenders are looking for when they look at this type of scenario when they have a cannabis deal in place? What is the first thing that they look at?
Okay, the first thing we're going to look at is all the legal aspect, of the business. We want to see all license permit from the state, from the city, county government, and secondly, we're going to review the lease of the cannabis of the tenant around the cannabis related business, because sometimes all the tenant in the building can challenge the cannabis business and it will cause a disruption in the lease income to the landlord.
Okay.
They might claim, since you rent this space out for cannabis, I'm not gonna make payment until you kick that business out, something like that. Those things can be resolved in court. However, it will cause a disruption to our cash flow as a lender.
Okay, so you did mention about real estate, and we want to make it very clear when we look at cannabis financial, it needs to be either an office building, a retail center, a warehouse. Um, Now, what about standalone building or mixed-use properties?
Okay, we have no problem with standalone building or mixed-use property, but like what we normally run into is a location. Um, 2 or 3 years ago, if you look for a space to lease for cannabis, 5 out of 10 times the landlord will say no.
Okay.
Just because it's still something very new and there's still some stigma to it. So cannabis related business tend to go to a third tier city, a more remote location when the landlord is more receptive to something like kind of art. So in those locations, it might cause a problem to us, because if we have to take the building, the property back, there is a very low liquidity. If we want to unload it into the market, it might take much longer time than a building a property in a major urban center.
Okay. Okay. I see, Ken, your question. We're going to discuss all your questions at the end of the webinar or the presentation and the discussions that we're having right now. So Eric just did mention about the metropolitan urban area and the places that we are pretty much looking into when it comes to a cannabis establishment. However, lenders do tend to avoid these areas due to a low quality if they do have to take the property back. As he mentioned, um, properties that are not remotely, we try to stay away from. So, what is the third thing that you would say? Market rent is one of the things I think that we pretty much look at.
Right. So when we grant a loan, we always look at the income, and the tricky part with like a building with cannabis tenant is, since it's very hard for cannabis related business to lease a building, they tend to pay 2 or 3 times higher than the market rate to get in. Some landlords say, okay, I will lease to you. but like instead of $1, you have to pay for me $4. So that's real income to the landlord. So when the landlord of the building that has cannabis related business in the building come to us and say, I'm going to apply for this loan amount, and I believe the rental income for my building would support the loan amount. Look here, I have a lease agreement for $4 a square feet, but real market rent is only 1.25. The cannabis related business just pay higher because they have a hard time getting into any building. So when we underwrite the loan, we only use the market rent, which is 1.25 cent per square foot. So the loan amount might be lower than what the borrower is looking for. On paper, on the income wise, the number match. But if we have to kick that cannabis business out the building, we rent to a law office, a dental office, then what we get is only 1.25. We have to go with the market rent, not the actual rent.
Okay, so yes, please keep in mind lenders will use the market, not the actual rent to underwrite. Okay, the number 4 thing that we look at is what's the financial condition of the cannabis related business. So the ability for the borrower to pay this loan, correct?
Correct. For all borrower, we always look at the ability to repay. How do you gonna pay back the loan? And the hard thing with cannabis related business is, like I say, all the bank in this country is federal charter, and they are prohibited from accepting deposit from any cannabis related business. So it's a cash based business, and we cannot underwrite the loan on the cash based business. So we have to go with like market rent underwriting. We have to go with like the borrower personal financial statement to see how deep his financial strength is. A lot of like outside factor, not the real income of the business, because the real income of the business is maybe all cash, no trace of it. So
and we had a few deals like that where we don't have proof of bank statements or tax returns showing for the sponsor on these type of business. So
right.
What do we look at when we don't have something like that?
Okay, not like some. All the time we don't have any information on the financial of cannabis related business. First thing first, we would require to see a borrower personal financial statement. We're gonna see like how strong his financial is, his liquid cash position, his asset, his liability. At least that's it will tell something about the business. You cannot come to a lender and say, I'm doing great, and here my personal financial statement it shows $50 in my bank account. So it raises a red flag in there. Secondly, we're gonna look at like, okay, market rent normal. So if we had to take the building and lease it out to like non-cannabis business, how much we can get. So if we know worst case scenario, we only get $1 per square foot on the building, then we will underwrite on $1 per square foot on this building, and we don't care about the financial situation of that cannabis related business.
Okay. So once again, if nothing works, lenders will use the market rent value, worst case scenario, to determine the level of risk they're willing to put in the deal. By saying so, it's expected the borrower to have at least 50% equity strength in the transaction. This means we need to have a strong sponsor.
Right.
Okay.
Don't expect to get into like any cannabis related building with like 10 or 20%, even 30% down payment. Minimum 50%. People can advertise a lot of things, but like throughout my career, I never see anything higher than 50% LTV, which means buyer borrower has to come in with 50% in down payment or maintain a 50% equity position. That is a caution. That is a caution for us lender because we have no clues on the financial situation of the business.
Okay. Now we're going to talk about what universal commercial capital does required and what are our guidelines. So we're only lending in the state of California for cannabis.
Right. Only California right now.
Okay. And our
Only
highest,
major urban center too.
okay.
We don't go to like the location in the middle of nowhere. We don't go to remote area. Remote means the town city with the population count of 20,000 or under.
Okay. And what is our highest LTV at this point? Determining if it's a purchase, a refi.
50%.
50%, the highest.
The highest.
And our rate, where does our rate start?
Rate start at 8.75 and up. Depend on the location, depend on the business. But like we do a lot of deal at 8.75. When I say 8.75, because we price our loan on Wall Street Journal Prime plus 4. And Wall Street Journal Prime right now is 4.75. Plus 4 is 8.75.
Okay.
Yeah.
Okay. And the term is basically 12 to 24 months, right?
Since we are private lender, the term very short. 18 to 24 months.
Okay.
Max. There is some lender out there who would do longer, and another thing is there is a secure and fair enforcement act which was passed by the House and waiting for the approval from the Senate. If that act is passed, then all the federal charter bank can loan on cannabis. And if they can loan on cannabis, then we can have a longer term.
Okay.
Yeah.
Now, and what about fees? Our fees?
Our fee normally around 2 points and up, but like no less than 2 points, but like all normal third parties fee, appraisal, escrow, title.
Okay.
Yeah.
And please keep in mind that our minimum loan amount, it's 1 million.
I can make exception for like 750.
Yeah.
But like a lot of work with title, with underwriting, so it's not worth it to do smaller loan than 1 million.
Okay, so I think we're gonna go ahead and start with the questions. I just want to lay it out that we do standard protocol, and we do take in consideration again the net operating income, the LTV, the exit strategy, the sponsor strong sponsor in place, and the market rent conditions of the property as well. We have a question right now, Eric from Lamar. Do you work with loan brokers?
Yeah, all our loan come from loan broker. We don't work with like the consumer direct.
Okay. We have another question from Ken. It says, I have seen companies doing cultivation inside buildings like warehouse. So where a client wants to buy a warehouse to do cultivation, would that be okay for financing?
Yes and no. Yes mean the real estate, but when they buy a warehouse and to grow inside it, there is a capital outlay for equipment, and we don't count equipment into the total value of the deal. Suppose they say, okay, after everything is finished, my building is worth 2 mils, but equipment alone costs 1 mil. So we only go with the 1 mil value of the real estate only. Yes, with equipment, the whole building will cost, will worth 2 mils, but we don't count equipment. So that is a thing that we should like look out for when we apply for the loan for warehouse, which can be used as a greenhouse, as a cultivation area.
I think we have another question.
Yeah.
It says, for purchases, what do we require? Do we require experience?
We want to see some experiences. And then like for people without experience, we want to know why you want to get into this cannabis related business. And normally for non-experienced, we want to see some deep pocket, a strong personal financial statement, to cushion your inexperience.
Okay. Let's get more deep into personal financial statement. Do we require the borrower to own more assets or to have a specific amount in cash in the bank, or what is specifically do we
We prefer to see the cash and non-cash asset to be equal the loan amount. That's ideal. If it's less, case by case.
Okay. Okay. All right. Do you want to add anything more to
No.
this right now? Okay, to our webinar. Well, I really do appreciate you guys for joining us today. Please feel free to send us any questions. Give us a call. There's the number on your screen right now on your phone, if you're using your phone or if you're using your laptop. 714-202-2654. You can also email Eric at universalcommercialcapital.com, or you can email me at ivy@universalcommercialcapital.com. I really do appreciate everyone who has attended today. If any questions that you have and we just missed, please go ahead and get back to us. Give us a call. Eric?
Yeah, thank you, everyone.
Thank
See you
you.
in the next webinar.
Yes, see you in the next webinar, guys. Thank you so much. Bye-bye.